Hello, I'm Chris Slight from Off-Highway Research, and in this video I'm going to be talking about some of the findings from our new report on the impact of Brexit for the UK construction equipment industry. Now obviously with this report we're looking into the future and we're in uncharted territory to some extent, but there have been some impacts from Brexit already following the referendum in June 2016, and these are primarily what I'm going to discuss in this video. The first of these is the downturn in the UK construction equipment market, which we feel has been worsened by the decision to leave the EU. The second is the impact of the sharp depreciation of the British pound, and the impact this will have on the UK construction equipment industry itself in terms of sales and inflation, but also the possible implications further afield as UK-made construction equipment becomes cheaper on export markets. So first let's look at the impact of Brexit on the UK construction equipment industry. The first thing to say is that some sort of downturn was expected in 2016 anyway, following several years of fairly strong growth. However, we feel that the Brexit decision has made that downturn more severe than it otherwise would have been. We think in 2016 the market will fall 10% compared to the 8% that we were previously expecting. And we see lower than expected sales continuing for a few years. However, it is relatively small in machine terms. You're talking about maybe 500 units of construction equipment per year over 4 or 5 years. The other thing to say about the UK construction equipment market is there could be an unexpected upside. Following the Brexit decision, there has been some discussion in government about maybe stimulating the economy with infrastructure investment. And while these projects aren't going to happen overnight, they may come in a couple of years and boost demand for construction equipment. The second factor I'm going to discuss is probably a bigger one, and that all stems from the sharp depreciation in the pound immediately following the referendum result in June. The pound is down anywhere from 6% to 15% against other currencies, and this is particularly pertinent for the UK construction equipment industry because 70% of the construction equipment sold in the UK is imported. The most significant partner countries for the UK industry are other European countries, which supplied in 2015 a total of 43% of the construction equipment sold in the UK in unit terms, but Japan and Korea also sell significant numbers of machines in the UK. The depreciation of the pound means that these imports to the UK are inevitably going to get more and more expensive. We estimate that the overall effect is 7% inflation, which on 2015 volumes equates to about £125 million of extra cost for the industry. Now, of course, these price increases don't come through all at once, but they will come through sooner or later. And that's something that we see as inevitable for the industry, higher costs for construction equipment. This issue of higher prices for construction equipment is one that we go into in very great detail in the report. We look at the market product by product across all the main volume products, particularly mini excavators, crawler excavators and wheel loaders. And within these groups we look at the active manufacturers, their market shares, and most importantly of all, where the machines they sell in the UK are manufactured. And from that we get an inflation figure for each machine type, but it also highlights some of the manufacturers which may benefit from the weaker pound and some of those which may be vulnerable depending on where they source their machines. The flip side of a weaker pound is that there may be a price advantage for construction equipment which is made in the UK. Now this isn't a straightforward calculation because UK-made equipment will contain a lot of components and other content which is sourced from around the world. So obviously for those UK-based manufacturers their costs will be higher. However, with UK labour costs and presumably some content sourced in the UK, there is an opportunity for some price advantage. In 2015, about 42,000 construction machines were manufactured in the UK, and only about a quarter of them were sold in the UK, so 75% or about 32,000 machines were exported. If you're looking at companies which manufacture in the UK, Of course, JCB is one of them, and JCB is by far the biggest. But Caterpillar, Komatsu, Terex Construction and Volvo all have manufacturing plants in the UK in the earth-moving equipment sphere. And also in mobile crushing and screening, Sandvik and Terex Materials Processing. And that level of exports of UK-made machines is significant. British-built construction equipment accounts for about 5% of the global equipment market outside of the UK. Now, if you look more realistically at the market and look at the places where that equipment can realistically be sold, so excluding countries like China, India and Brazil where there's local manufacturing or there are tariffs in place, you're probably talking about British machines accounting for 7% or so of the market which is realistically accessible to them. As I said, there's a very great deal of detail within the report about the different product groups, the manufacturers which are active in the UK, and the impact that they may feel as a result of the depreciation of the pound in particular. There are also other sections which give a lot of background on the UK's relationship with the European Union, and it also looks ahead to what might happen as the Brexit deal is negotiated. The report is available to buy from our online store, www.offhighway-store.com, and there's also more information on our main website, www.offhighway.co.uk. Thank you very much for watching.